Hey everyone, this week I'm going to focus on what's happening with the industrial property market. And in a way, industrial property performance is adjacent to the retail sector, which I focused on last week. Over the last few months, retail sales have been particularly strong, with headline retail sales up by 6.7% on a year-over-year basis in June. But a big contributor to that has been a 14.2% increase in non-store retail, which is predominantly internet sales. And e-commerce plays a significant role in the demand for warehouse space. Now, there are a variety of macro policies that are also influencing warehouse demand. First, the conflict in the Middle East has driven up fuel costs, which in turn is pushing shipping and trucking transportation expenses higher. Prior to the conflict, shipping a container of goods from East Asia to the US West Coast cost about $1,850. In mid-July, the cost to ship that same container increased to more than $7,000. The shipping cost has almost quadrupled. In addition, once the products reach the United States, the trucking costs are up by 35% compared to February. These elevated transportation costs will undoubtedly put upward pressure on inflation, but they'll also impact retailer and manufacturing inventory decisions, which will in turn shape warehouse demand. In addition, businesses face an uncertain tariff climate. The 10% flat rate tariffs imposed under Section 122 of the Trade Act of 1974 that were imposed in February expired on July 24th. But they were immediately replaced by new tariffs of 10% or 12.5% on most major U.S. trading partners using Section 301 of the same Trade Act. However, Section 301 tariffs can be country-specific and even product-specific, so tariff policy could become very fluid in the coming months. Some businesses front-loaded their imports in anticipation of higher tariffs, as demonstrated by the 15.3% year-over-year rise in imports last May. But others have been trying to operate with lean inventories. The question will be when and by how much businesses will build inventories ahead of the holiday season, given the fluid trade climate. Now, all of that being said, industrial space demand in the second quarter was down a bit from the first quarter, but it's well ahead of the absorption in the second quarter of last year when the first round of tariffs were announced. And although the volume of newly filled space has been modest, the sector is benefiting from a slowdown in construction. Industrial space additions in the second quarter totaled just 46.6 million square feet, the lowest quarterly deliveries since 2014. And that development slowdown helped keep vacancy rates stable at 7.8%. But while the overall vacancy rate was stable, there's been downward pressure on the vacancy of larger warehouses over 200,000 square feet. Meanwhile, smaller properties have been experiencing rising vacancy rates. That said, small warehouse properties under 50,000 square feet still have the lowest overall vacancy rate of just 4.6%. From a rent perspective, the national average has basically been treading water. Average asking rents are 0.5% higher than they were a year ago, but they've been marginally rising and falling over the last few years, and today the national average rent is the same as it was in the second quarter of 2023. That's not true in all markets though. Some markets like Nashville, Louisville, Kansas City, Houston, and San Antonio have sustained steady rent gains over the last 3 years. Others, like the Inland Empire in Los Angeles, have lost pricing power. In many ways, the industrial investment climate is very granular, submarket by submarket. And that complex combination of opportunities and challenges is driving investor engagement. Transaction activity over the last 12 months through the second quarter generated steady gains, sustaining a multi-year trend of increasing investment into the sector. Average industrial cap rates reached a trough of 6% in 2022, but have since increased to an average of 6.8% in the second quarter. And despite the macroeconomic volatility, the logistics and supply chain challenges, and the ever-changing global trade environment, at the end of the day, consumption continues to drive forward and e-commerce's share of retail sales continues to rise. That suggests long-term demand for industrial warehouse space will continue to increase. And that's the key for investors who keep their eyes on the horizon.